So first things first, we're going to explain what a trading strategy is. So basically this is an established approach to trading designed to give you the best chance of achieving a profitable return. So basically this is the way you're going to decide and plan out how you are going to go about the market. So we have the types of trading, which are, we have day trading, we have position trading, trend trading, swing trade. All these are different types of trading differentiated by either time frame and how trades are. So when choosing a strategy, it's really about your personality type. This is more personal, especially when choosing a strategy. You must know yourself and see which one suits you. So let's get right into that. Hopefully you identify which trading strategy actually suits you. So first of all, we have the day trade. Day trading, none of your positions should remain open after the market closes. You avoid added costs and risks are often associated with holding a position overnight, because as you know, some brokers actually charge for holding a position overnight. So a day trader will try and generate quick profits from small price movements within the market. That means this type of trading is only really suitable for full-time traders who have time to pay like constant attention to the markets, because you must be there day in day out. So the main time frames of a day trader is usually 1 hour to 4 hours at a push. Sometimes, usually a day trader trades with 15 minutes. So with day traders, sometimes you find some day traders are what we call scalpers, which trade in the 5 minutes. So day traders, normally you find signals are given either in a day trade. So this one is for someone if you really have time on your hands and you can afford to be on the markets and monitor your trades within that day, open and close them within that day. This is for you. Then we have a position trade. So position trading involves holding on to a particular currency pair for a long period of time. So this can be like several weeks or maybe even longer. You're in it for the long run. So position traders will make far fewer trades than day traders, with each trade carrying a greater potential for profit, because you're looking for the bigger picture here. So obviously you will experience greater profit. However, holding a position for a long time also increases your risk. So if it doesn't go your way, you're in it for the long run as well. You will lose bigger the same way you will gain bigger. I would recommend if you're very experienced with the market, this is the way to go, position trading. But if you're not so confident with your strategy and you're not so experienced with the market, position trading isn't something you should trying out, because it carries greater risks. But at the same time, it does carry greater profits, because you must take into account, you must really do your homework with position trading. You must know that currency pair, what's going to affect it during the month, and so you must be good at fundamental analysis, and on top of that, your technical analysis must be, so you must be very sure about what you are anticipating. Alright, and then we have trend trading. This is a favorite for most traders. So trend trading attempts to profit from the market's trends. If you've seen some of our lessons before, you would already know that we can identify trends and we would be going with that. It's irregardless of time frame, really. So positions are kept open as long as the trend continues, meaning the trend trading can be short, medium or long term. So this one is irregardless of time frame. It could be 5 minutes to a 1 day time frame, but at the end of the day, as long as a trend is happening, you're going to be in that. So if we're seeing an uptrend, we're just going to be buying and buying until that uptrend is finished, until we feel it obviously hit the resistance or support, or whichever you're seeing. So trend trading is another good one, and like we've discussed before in our previous lesson, trading the trend, the probability of it going within our favor is pretty high as long as it isn't at reversal point. And then we have, last but not least, swing trading. Guys, these are the main types of trading. There are obviously other types of trading, but we're looking at the main types of trading here. So swing trading, this is quite a common way of trading as well. It's heavily focused on technical analysis. Swing trading involves finding short-term price patterns to trade. Swing traders tend to focus solely on price, paying less attention to value when finding a currency pair to trade. Positions can be held from 1 to several days, longer than day trades but shorter than position trades. And swing traders will sometimes trade against the trend if the analysis shows an opportunity. Like we said, it's heavily based on technical analysis. So if you're using price actions, those support and resistance, obviously if we're focusing on technical analysis, we are going to go against the trend if we see it's reached what we feel as these resist, and obviously we're seeing a reversal, so we'll start to sell. That is basically swing trading. And on top of that, swing trading is holding a position at least more than a day usually, so we normally use 4-hour time frame, and this is one of the most common strategies out there, swing trading, because it's a bit more predictable and not too volatile. You can at least make a few technical analysis. Really works on this sort of time frame, 4-hour and 1 day. This one is for those that are a bit experienced. If you feel you're familiar with the markets, this is the way to go. So if you want to get more in-depth strategies and technical analysis and so forth, we have our advanced course. You can take that. It's available on our website, www.thetraderkeys.com, and we look deeper into such strategies and how to analyze and make profit.